Hello and welcome to Pro Trader Strategies market commentary for Monday, April the 27th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic and geopolitical and how that all impacts the market analysis. Well, I do that same stuff in these daily market commentaries, but I layer on top of it these option strategies that I find based on some of my guidelines in order to implement those into a portfolio, how we can use that and then increase that overall yield in our overall portfolio. All right, well, without further ado, let's get on with the economic data. It's a Monday, so we aren't getting a whole lot of data today, but this week is jam-packed full of all kinds of things market related. Later on this week, we get some crude oil inventories. We've got ISM on Friday. On Wednesday, we have the FOMC meeting. The ECB meeting is coming up as well. So we have a lot of things going on there. And then on top of that, we have earnings. And with the earnings, we have all kinds of big names that are going to be coming out as well for that. Some to mention are, I think NVIDIA is coming out this afternoon. We also have Pepsi, Pfizer, Starbucks, UPS, General Electric, MasterCard, Microsoft, Qualcomm, and Thursday, Apple, ConocoPhillips, Dow, Kraft. So all kinds of crazy ones. Friday, Clorox, Exxon, Honeywell. So a lot of these names that we've been talking about are going to be doing some earnings this week. So earnings will be a lot that we're talking about for these markets. I'm looking at NVIDIA, and I'm going to be probably selling some puts in there because I think NVIDIA is going to be moving to the upside. So keep your eyes out for that on Twitter. But I'm going to be looking to start playing some of these earnings trades that I don't already have trades in. Facebook, MasterCard, I already have trades on. I'm going to leave those on through their earnings because I'm playing them to the upside. But some of those other ones like NVIDIA, I don't have anything in, so I want to take advantage of that. All right, crude oil, like we talked about, we got inventories coming up this week. There is no demand, and it was kind of funny. It was like I heard somebody saying this weekend that gas prices, as low as they are, below $2, I think $1.79 is what we paid to fill up our tanks not too long ago. But somebody was saying that gas prices at these levels is like handing a bald man a comb because there's no need for it. But funny in and of itself anyway. It took me a month to go through a tank of gas, over a month actually at this point. And most of that was just going to the grocery and going to the places to hike on the trails and stuff. So haven't had a whole lot of need for it either. So that's what I think a lot of people are saying, is that these gas prices are going down, but they just have no capacity, right? Same as the crude oil. There's no place to store it. Well, if you aren't using it, then there's no place, there's no reason to fill up your tank. So crude oil is starting to come off. Markets are getting some lift, and most of that is due to there is a lot of states that are talking about opening up. Even Las Vegas is talking about opening up. Georgia is another one. So some stocks are starting to get a little bit of a boost based on that positive outlook that the economy is going to start getting back on track, if you will. All right, so crude oil off again today, down about $4 a little in change, but coming off of those highs, it does not look like we're going to be able to see $20 a barrel anytime soon, to be honest. All right, but we got gold futures. They're coming off. Now, I've expected gold to kind of stay above this 1700 mark going forward as the Fed and everybody around the globe is doing a race to debase, meaning printing money. So as you weaken your overall currency and have more inflationary fears and things of that nature, it gives the gold some strength to the upside. Although we are seeing a bit of a pullback here today with the equities making some moves, I think that's more of reallocation of money for some of these people. They'll sell some gold and then buy some equities as they see that strength happen. And I think that that's what we're starting to see a little bit here with gold. Bonds are off by about a point. I just saw Rick Santelli's gave the 2-year note auction an A-, which means that it was subscribed 3-to-1 or something like that, which was a very good, strong auction. A 5-year note one's later on today. So a little surprising we're seeing this come off. I think most people were expecting that auction to be a little bit worse than it was. So that was pretty interesting to see with these interest rates as low as they are. There's that many people that want to get involved there. All right, we've got the VIX coming off. Looks like those 40s are behind us, at least for the near term. You know, I mean, when these economies start to open up and if we start seeing a spike in some of these coronaviruses, it could change everything though. But the Dow Jones up to over 250 points, making a nice move. I'd like to continue to see these moves making higher highs and higher lows, which is what we are currently seeing, you guys. So that is a good thing. Dow Jones hasn't gotten back into that value area yet, but trying to get above that 50-day moving average, which we haven't seen in several months. Now, we did get that crossover of the 50 and the 200-day, and that is long-term bearishness, but a big move today and sustaining this 260-point move, we would be able to get above the 200-day moving average, and that is pretty key for a bullish market assumption, if you will. We've gotten above the 9-day moving average on Friday. Today, getting above that 200-day is really going to be key, because that would expect us to get back up into the value area, which I've been waiting for in some of these blue chip names like we've talked about with the Nasdaq. I mean, Nasdaq is looking to test the value area high. It's blown right through as people are really putting some money into that tech sector. But I think that, you know, tech sector's probably going to do very well, right? We've talked about this with building out your home office and more people working from home. There's a need for that right now, but it is good to see that people are doing some risk on trades. And then we move over to the Nasdaq. It's up 58 points, and this is what we were talking. Yeah, we on Friday moved above that value area high, and what we've seen in the Dow Jones was this crossover between the 50-day and the 200-day right here. Now, a crossover is long-term bearishness. So this rally that we've gotten has slowed that descent of the 50-day, and we could see it start to curve away from that. So, you know, when they cross over like that, that is a bearish assumption here for the long term. But it looks like we're going to be able to peel away from that a little bit if we can hold on to this rally in the tech sector. Again, saying that we are higher on the year is still a little bit bizarre, knowing what we've gone to and knowing that we've gone from 3.5% unemployment to close to 15% unemployment right now. So that is a little bit disconcerting to me that this market is making these moves as fast as it is. I'd like to see some more pullback in here and kind of work this all out as the weaker hands get shaken out. That would really indicate that the bottom is really in there. And then we move over to the E-mini S&Ps. Again, back into the value area where the most time and volume has been spent. We can see here it did get its crossover of the 200-day and the the 200-day here and the 50-day here. That signals long-term bearishness going forward. But now we've gotten back up into that value area where I've talked about it acts as a magnet. That's where the most time and volume has been spent. That's where the market has found value, and that is a good thing. That means that we're going to probably get up and around that area and maybe settle down a little bit. So that's good for us as investors, you know, with especially with a lot of us that got in down here at these lows. You know, this is when I was touting. That was when Ackman was on TV and basically crying. That was the time to get in there. That really showed a capitulation type moment. And I hope a lot of you guys were able to take advantage of that like I did. All right, E-mini S&Ps. very bullish on the overnight. I think that has to do with a lot of this, seeing this maybe flattening of the curve where we're starting to see the market or the cases start to slow down. People are coming out of the hospitals, and it seems like people are recovering from this nicely. All right, I just want to talk about a couple of things that I've done, and TLT is one of those. Remember, TLT, I played this. I sold the May 181 calls in here, so I was selling May 181 calls in there, and I sold them. Sold the 181 calls for 99 cents. I did this based on the webinar I only did on Thursday. So I just put these trades on Friday. Got that theta decay. We've got some volatility coming out, which is what we expected. That's what we want to see when we sell these premium type strategies. And with that being said, I sold those May 181 calls for 99 cents, and I bought them back for 43 cents today. So I got a 99-cent credit, 50% of my max profit. It came in quite fast today. Bought those back for 43 cents. All in all, made, what is that, 56 cents on that trade. So we got out for a nice little winner on that one there. Now, if I get a bit of a bounce back up in TLT, I'm going to continue to do this until it gets to a place where I don't like my support and resistances like this. Getting above this 179 area, that's huge for me, because that is, I think, the benchmark of low rates in bonds, 10 years, and the treasuries across the board. So that's going to be the number I'm looking for. Anytime we get those bounces higher, I'm going to be looking to sell some more calls in that. But we are out of, or I am out of this May 181 calls in TLT. Didn't take very long. I talked about this. Lowering basis, it's kind of like you're doing covered calls against your bond portfolio, which is a little bit more difficult than a covered call strategy, because you're not really getting your bonds called away from you. You're just trying to get an extra coupon on these types of trades, and that's what I was easily able to do with this in just a couple of days. So the winners come and go quickly. We don't learn a whole lot from that, other than we set this up in the right environment using my right strike locations that I talk about with these rules in the webinars, and all of those things came in. We got the directional move. I got the volatility coming out, had the days to expiration with that massive theta decay that we got, and that happened over the weekend as well. So coming into today, a lot of those things came together to not have to have this trade on for very long. So get in and out of those quickly. Got out for the 50% of my max profit, which I talk about in these webinars. So if you haven't watched those webinars, you guys, and you want to start trading options, you should definitely check those out, because if you come up with an assumption on a directional move and say, for instance, PENN or whatever, I talk about the specifics in and around these underlyings in order to take advantage of that. Now, PENN, I wanted to mention because it's making some nice big highs today, getting very close to back to that point of control of right around $19. We're just shy of that. A big $2 move earlier today, coming off the highs as of right now. But a lot of this has to do with the gaming sector, or Las Vegas, kind of opening up. And the hopes is that we are going to start seeing some sports. We aren't going to have to just watch The Last Dance, although I love it. I love Jordan, probably my favorite athlete of all time. But, the weekends, I'd watch soccer at this point, you guys. I'm not a huge soccer fan on TV anyway, but I would watch soccer at this point rather than watching all these old matchups that we're kind of getting on TV right now. So PENN starting to make the moves as it's expected the economy will start opening back up. People are dying for sports, and these guys will benefit from that quite a bit. All right. Also, Thor Industries getting a lot of whispers out there that people are going out there and they're quarantine vacations or quarantine-acations where people are getting out and going to different natural or national parks, getting out there. I think that we are going to see more and more people, which is kind of the rumors coming out, that people are going out and buying fifth wheels. They're buying pop-ups, camper pop-ups, to get out there and go camping. You know, they're still able to social distance, but they're getting it done in a different way. They're not just stuck at home. They're getting outside, getting out into nature, and these guys are going to be a benefactor of that long term, because I think that this is, you know, it might be a big paradigm shift in how we vacation, right? So they're making some nice moves. And then finally, that's what we're looking at, was Thor. All right, so that's all I got for you guys, other than those couple of trades that we're looking at. And I'm going to be looking at NVIDIA for today. And their earnings going to be, I thought NVIDIA was today. This makes it look like NVIDIA is not today. I thought we were getting theirs after the close today. I'll have to double check on that. All right, so going to be starting to look this week for earnings trades. If you haven't watched the webinars on earnings and how we set up those, because I've got specific, you know, guidelines for how to trade earnings with options in those specific webinars, so check those out. It's not like just setting up a regular trade based on our assumption. We're trying to play these probabilities and when and where is the right timing for all of this stuff. So check that out. All right. So without further ado, you know, we got the last thing we got to talk about. Please go over this and review this based on your risk parameters. We're an educational company. Past performance of any trading system or methodology is not necessarily indicative of future results. All right, if you can't take that, take it easy.